Welcome back, and joining me with more insights on the day's trade is Faheema Adia from Momentum Securities. Faheema, thanks so much for your time today. And let's start with general markets action. We've really had a bumper week. You look at US markets, you look at markets here at home, but we are starting to see a bit of a pullback, especially here at home. Is this anything to worry about, or is it just some profit taking?
Afternoon, Tuleng. Thanks for having me. Yes, so globally, markets are a bit mixed today. We are seeing the JSE weaker again today. And like you said, we are seeing a sell-off once again in that resource sector. I think it is being driven somewhat by a weaker platinum, palladium, and gold price. But yes, absolutely, I think it's just about time we see some profit taking here, given the massive rally we've seen in the resource sector year to date.
I noticed that oil prices are higher, though, and I think oil was one of the only commodities trading in the green. What's going on then? Is this on the back of some of the optimism we've been seeing when it comes to trade deals and how that can influence demand dynamics?
Yes, I think it's exactly that. So positive global growth has a positive impact on the oil price because it increases the demand for that. And I believe that Trump is now close to reaching a 15% tariff agreement with the EU. India has also said they're quite confident that they could reach a deal with him quite soon. And it's quite likely we'll see a deal with China also come through in the next week or so. So I think just on the the backing of that, we're seeing oil respond and move a bit higher.
All right, and I think they are meeting the Chinese officials and officials from Washington are meeting today to kind of seal that framework we've had come into play over the past few months. Let's look at some company news. Surprising news coming through. That mass bid really making headlines. Hyprop walking away from the deal today. Talk to me about what you've made from that, especially after we saw Prime Capital really pushing against the Hyprop bid.
Yes, this was a highly contentious bid in Twelling. We've seen a lot of media drama about it over the past week. But, I'm not surprised that Hyprop has walked away from the deal. I think there wasn't much probability that they would have been able to get it over the line.
Yeah.
So the main issue here was that they only gave the board and investors 1 week to make a decision. The deadline to vote on this was actually meant to be today. And that just didn't give the board or investors enough time to really consult with experts to get their own independent valuations of the deal, to see if it made sense and so forth. So that was a bit of a concern. And then the other issue was there were certain terms of the deal that would just allow Hyprop to be able to unilaterally make changes. Even once investors accepted that deal, they could decide if they wanted to walk away, if they wanted to make amendments to the cash versus the share offer and so forth. So it did raise, I think, quite a lot of concerns for both the mass board, for Prime Capital, and also for some of the investors.
And let's look at some operational updates out of the retail industry, particularly the buildings retail industry, with Cashbuild delivering an uptick in revenue in its top line, but it doesn't seem to be exciting markets as much. Does this just speak to consumer spending patterns, especially when it comes to, renovation and, the DIY trend kind of falling off? I mean, even the last results that we saw, CEO spoke about how they're not even seeing those two-part withdrawals filtering through into their company.
Yes, exactly. So I think we're seeing a slight increase there, but like you said, the consumer is under a lot of pressure. And in this environment, things like home improvements, renovations, and so forth would rather be seen, I think, as a luxury spend.
Yeah.
And consumers are just not in a position really to do that, given that they've been under so much pressure. But on a more positive note, we see they are looking to acquire this company, All Build Company, which serves a broader customer base at all levels of the income segment. So hopefully they will be able to generate further revenue from there. But I think for now, given that the consumer is under so much pressure, until we see some further interest rate cuts come through, it is a tough environment for builders.
And let's talk about those interest rate cuts, right? And looking at some of the updates we've gotten this week, just to highlight some of the pressures that consumers are facing. We saw it out from Mr. Price, where growth grew slower than expected. Vodacom, they prepaid numbers for SA not as buoyant as what we're seeing playing out in Egypt. Just pointing to perhaps the consumer needing the taps to be opened a bit more. With that being said, and looking at where inflation is, yes, ticking higher, but still, within the SOB's 3 to 6% target, at the lower end of the target even. Do you expect the SOB to cut rates come next Thursday?
Yeah, so like you said, Ntoleng, we are still seeing inflation at the bottom end of that 3 to 6% target band, even though it was up slightly, primarily because of the increase in the meat price after the foot and mouth disease outbreak. It is still below, near that lower end of the target. So I do think it's quite likely we could see some interest rate cuts come through, especially like you said, considering that the consumer is under so much pressure. Also, it's such a weak growth environment. We really need to see improvements to the GDP growth.
All right, and let's get your stock pick before I let you go.
Sure. So my stock pick is Anglo American. So we've seen a massive rally in the PGM and gold stocks this year, but not too much on the diversified miners side. Bear in mind, though, that copper still has quite a strong investment case, but I think the price for copper really has been caught up in the tariff drama. But taking a long-term view, we do expect there to still be deficits in the coming years due to the renewable energy demand. That will put some upward pressure on the price. And Anglo American does have some really great copper assets. After its demerger with Valterra, copper's contribution to EBITDA will likely increase by more than 60%, and we're also expecting to see EBITDA margins improve after it separates from De Beers. So just taking a long-term view on this one, I do think there's still a lot more upside.
So Anglo American, one to look out for. Faheema, thanks so much for your time and sharing your insights with us today. That was Faheema Adia from Momentum Securities.